The highest of the analyst estimates. The bank cited income from higher interest, Islamic financing, and FX for the increase in profit. Yusuf and I spoke with the NBK Deputy Group CEO, Sheikh Al-Bahar, on the line from Kuwait City.
Fourth quarter is basically a continuation of the strong performance of full 2018. During the quarter, we reported net profit of $324 million, and that's 17% growth compared to the fourth quarter of 2017. In the context of the full year, which, as I mentioned earlier, so similarly strong performance, our profit reached $1.2 billion, and this is record level. The balance sheet as well grew by 5.4%. Our total assets $90 billion, over $90 billion, and loans and advances to clients increased by 6.9%, which is $51 billion. And our deposits as well, 4.1%.
Sheikh, obviously we can see all of those numbers on the press release. I suppose what Yusuf and I, as always, we want to take the story forward. We want to know where the biggest growth momentum is for you and where you see that coming. How's Egypt looking? How's Saudi Arabia coming? We'll circle back to the Kuwait numbers in a moment. Talk to me about the growth in the other markets.
Yeah, well, basically, the driving factors for the growth and profitability is basically our diversification and focusing on core banking activities. Net interest income grew by almost 10%, and the fee and commissions grew by 9% or 8.4%. The diversification mainly in the international, which accounted for 29% in 2018, and our Islamic bank, Bobian, contributed by 9%. In addition to the mentioned key factors of the contribution to our profitability growth, our operation in the domestic market remains the backbone of our bottom line. We continue to leverage our leadership position in Kuwait, and of course the growth in volumes in lending. So we are doing great, and we are very proud of it.
Allow me just to flesh out that key point in terms of opportunities. Are you looking at potential mergers and acquisitions in the new year? I mean, you've seen what's been happening in the region. It's been a big scene.
Yeah.
Can you see NBK taking part in that more?
Yeah, well, basically the focus is in, our growth within the existing markets. Currently, we don't have any mergers or acquisitions on our table, but definitely the growth in our markets is key for our future growth. As I mentioned, the main two markets, Egypt and Saudi Arabia, having achieved robust performance in Egypt, we look to consolidate and build upon recent growth. Egypt is still a promising market serving the largest Arab population, and Saudi Arabia, the highest and the strongest economy in the Arab world as well, opening great opportunities for us in growth. We just have another 2 licenses in Saudi Arabia, and in addition to the existing license, so we have 3 licenses for growth, and of course our Watani Wealth Management Company, CMA license. So basically the focus on our pillars in AUMs, asset management, international, the IBG, and regional expansion, and of course Islamic banking.
Sheikh, can I ask you, you talk a lot about Saudi there, obviously NCB and Riyadh Bank getting themselves together. What is the banking landscape in Saudi Arabia going to look like? Is this a good thing, this consolidation story in the Saudi banking platforms? Is that good news for the market?
Well, I believe it's good news for the market, but if we talk about NBK, our focus will be in KSA, basically the digital banking. The group digital transformation is, going on. We are investing hugely in the technology, and if you do not, focus on digitization, you will be dinosauring. So the future on group level, not just in KSA, it's in Kuwait, in Egypt, and KSA, it's digital banking. So we believe the future future is in technology. And it's not just on retail banking, it's also on wealth management and wholesale banking. So this is the focus. Yes, I agree, KSA is a huge market. It's a big market. It has, elephants in KSA, like, Riyadh Bank, NCB, Rajbi, and so on.
Sure.
But our core competencies will help us a lot in penetrating this market and, matching market share.
I mean, let me again bring in one other important angle, which is the oil price. That's the other elephant in the room. I mean, the volatility has just been nothing short of shocking. Oil plays a big role when it comes to confidence in lending in terms of your outlook for the rest of the year. I mean, where do you think the oil is going to range at in the coming months, and how critical is it that it stays above a certain level for you to make money?
Yeah, well, we believe economists believe that the level of oil prices will be in the range of 50-60. And Kuwait, as you know, it's have a very solid and big sovereign wealth fund. It's almost $600 billion, and this will not impact, the fiscal policy. And on Friday, S&P affirmed the Kuwait's rating at AA with a stable outlook. So we depend a lot on the, mega projects that the government is pushing to the market. This year, in January, we have 17 projects from the beginning of the year, 17 projects totaling almost 300 million dinars. This shows, the level of the fiscal policy and projects in Kuwait. And NBK is well positioned to lead and finance such huge projects. Last year, total projects reached almost $7 billion, and there are too many projects will be awarded this year and close in 2018. I believe the low oil prices won't impact, the fiscal policy, and the government is pushing more projects to the market. And the focus of the government currently is basically to finance the projects via PPP or, through banks.
Sticking with Kuwait, unveiled its budget proposals that forecast a 2.1% fall in the deficit this year. That's despite an increase in spending. The finance minister says the government remains committed to an economic overhaul that's largely failed to materialise. Zainab Fatah is our Gulf and economy and government reporter. She broke down the numbers.
They are very conservative. They're basing everything in terms of their budget on a $55 oil price, which is $5 more than they did for the current year. But even with that, they are removing about 10% of all the revenue that comes, including oil revenue, into future generations fund, and trying to focus on spending and growing their spending to try to help economic growth in the country. But so far, they are being very realistic about what the oil price is expected to be in the next year, a lot more realistic than Saudi Arabia, which we saw the budget last month.
Zainab, it's good to see you this morning. I want to ask you about the fiscal reform efforts in Kuwait. We all remember when the government cut fuel subsidies about 2 years ago, how much of a domestic outcry there was over that issue. What's the situation like now?
The short answer, so far they have largely failed on implementing and imposing the big parts of their fiscal reforms, which is trying to reduce the government's burden. If you look at this budget for the year, which starts in April, they are allocating about 71% of the funding that goes in the budget to salaries, the paying for the wage bill of the government employees, and also subsidies. That's about 2% below the current year, which is good in a way, but at the same time shows you the challenge they're facing. They're unable to tinkle with the social contract that basically forces the government to take care of most of its population. In a way, it's the employer of first resort for a lot of Kuwaitis. At the same time, they haven't been able to impose a VAT and an excise tax because of resistance in the parliament.
Zainab, I want you to weigh in on another story for us. The developments in Lebanon. We had Qatar investing $500 million into the country, and then hours later, in fact, just in the last couple of hours, Moody's cutting the country deeper into junk.
Exactly. It shows you the complexity of the situation in Lebanon, where even an investment in the pretty much the same day cannot really help much because of how deep is the hole that the Lebanese economy is in. So far, GDP debt is about 141% of GDP, and basically all analysts expect that while $500 million is great, it's not going to make a huge difference in terms of fixing the economy that needs a serious structural reform. And in the absence of government, no one knows where that's going to come from.
So Zainab, some people would see $500 million worth of bond buying as an instance of debt diplomacy by Qatar. Is this about politics in the region, or is Qatar maybe simply attracted to the yields on offer by Lebanese debt?
It's anyone's guess, but a lot of people expect in the region that basically the Emir of Qatar was one of very few heads of states to make it into the Arab Summit economic meeting in Beirut, which was shunned by most of the others. And there was talk in the media that Qatar was going to actually commit about $1 billion. The investment was about 500 million, which is below that. People around the region think it's probably some diplomacy and Qatar trying to basically become more show it's still an important partner in the region.
Coming up, Saudi Arabia and 4 other Gulf nations are set to join the JP Morgan Emerging Market Bond Indexes. We get more on this story. That's next. This is Bloomberg.